Gold and silver are brewing. Does this mean that a war is possibly on the cards? We'll look through the charts and recent news events to try to determine how possible and likely this is. We'll also figure out where the key levels are that you need to look at and the key things you need to be aware of. Let's run the numbers. On Twitter/X, I came across this really interesting graphic. This is transactions per second across Bitcoin, Solana, Ethereum, XRP, and Bitcoin Cash. It is quite staggering. Also from X/Twitter, people are getting worried about a possible World War III.
The determination of every country represented here at NATO remains rock solid. We will do everything that we can, allies will do everything that they can to ensure that Ukraine has what it needs to continue to deal with Russia's ongoing aggression against Ukraine, an aggression that gets worse with every passing day. Ukraine will become a member of NATO. Our purpose at the summit is to help build a bridge to that membership and to create a clear pathway for Ukraine moving forward.
But, of course, we believe that Ukraine deserves to be a member of NATO and that this should happen sooner rather than later.
Due to geopolitical tension and pressure around the world, gold and silver have been doing well. Just keep your eyes on my profile on X. I'm just releasing the indicators as they come through. When people are new to looking at price momentum and price charts, often where price is going is an absolute mystery. Why does it level out in certain situations and why does it base in others? To answer this question, I've spent many decades inside financial markets. We're going to pop on the indicator and I'll show you what exactly is happening underneath nearly 70,000 days worth of data on gold. The thing to remember is that these indicators formed through Level 1 and Level 2 standard certification are leading indicators of price. Some things to note when you're interpreting CTKS structure. When you have an accumulation of these particular levels, what it means is that they form a safety net that captures price. If you've got a lot of air gaps inside structure like we've seen here, you can see whatever the price is. In this case, we're looking at gold, but you could be looking at silver, you could be looking at US oil, you could be looking at the stock market, Forex, crypto. It doesn't matter. It's the same concept. Where there are fresh air gaps up to the positive side, things can move up very quickly, and this is on a 15-minute basis. So what you can see is gold just filled those fresh air gaps, came up to structural overhead resistance just above that 23.26 mark, and just consolidated around there. When you have this X-ray vision inside financial markets, it's just a license to print money. We can see that gold is starting to get over that structural resistance. There's a lot of geopolitical concerns right now. As far as NATO and the Ukraine are concerned, there's not much likely to happen until July, and even then, not much likely then. Despite this, the markets are reacting because there's some other things that we need to look at. For years, there's been a shadow war between Israel and Iran that has the potential to explode into direct conflict. Tehran has warned of a response to a strike on a diplomatic building in Syria. That attack killed a senior Iranian general and 6 other military officials. The thing to note about gold and silver, gold loves drama. It loves conflict and it loves problems. In fact, upward momentum, especially in terms of gold, is often due to geopolitical instability, and we've been seeing a lot of that recently.
Mr. Netanyahu must escalate to survive, and he believes that escalating the war is ultimately Israel's salvation. How do you escalate the war? You goad Iran into attacking you, and this is a direct provocation designed to precipitate a major response from Iran. So it's a foregone conclusion that if Mr. Netanyahu is successful and we are dragged into this, we will end up fighting with the Russians directly. Most of your political class is bought and paid for by the Israeli lobby. Hatred has taken over. Emotion has taken over. There is no rational calculus unless you want to judge plans for the annihilation of Arabs in Gaza, in the West Bank, and potentially southern Lebanon as a rational calculus. I don't think you're going to see a deliberate counterstrike from Iranian soil because, again, the Iranians don't want a war. This is the thing that has to be understood. Nobody in the region except the Israelis and the United States are enthusiastic about the war.
Gold's little brother, silver, just loves to hang out with gold, and you will often see momentum inside silver. Silver, because it has a lower market cap, can move more, but it's always based on structural levels. Moving in between structure is what every single price chart does. And when we look at silver, it's been around for 81,000 days. Let's pop on the indicator to see where the structure is. Okay, let's check it out. When analyzing structural levels, one thing that you always want to look at is structural levels that cluster together, because clustering creates strength. You can see between 2635 to 2648, there's so much structural support, and that means that silver's price didn't even, well, it kind of dipped into it, but it didn't just dive into it and seek to consolidate there, because there were so many buyers pushing up the price of silver. Also notice that there's a lot of structural overhead resistance, and this is between 2739 to 2750. We're just in the process of seeking to overcome that resistance in silver right now, but you can see with gold's chart, we've already done it. Again, keep your eye on gaps inside structure because that can create explosive price movements upwards. And when you see the structural resistance playing out, you know that things are about to calm down, if not retrace. But there's so much geopolitical instability around the world right now that gold and silver are benefiting. To create structural levels requires level 1 and level 2 standard certification. We've created TradingView indicators so that you can just get the result of applying level 1 and level 2 standard certification. So far, the S&P 500, the NASDAQ, the DXY, Bitcoin, gold, US oil, US 10-year, total crypto market cap, Ethereum, Bitcoin Cash, silver, Litecoin, and Solana have all been released inside the service. The service will literally save you so many hours. We're just looking at silver and gold at the current time. If you would like the indicators, just pop across to CTKSMethod.org. The best thing that we can do now is to look at Bitcoin levels and see how the crypto market may make it through the weekend. Just before we look at Bitcoin, it's important to understand that the main markets are very important and influential in driving Bitcoin's price. We can see the S&P 500, the futures, when they started to crash and crumble, Bitcoin was coming down until we had a breakout on the main indices futures, and then Bitcoin went with it. Just bear these things in mind. They're really important to understand. Even though so many people talk about Bitcoin as digital gold, it's really acting with a lot of confluence to the main markets. That is, it's acting as a risk-on, risk-off type asset class. I'll just explain that a little bit more deeply. We've seen the VIX, the fear gauge of the S&P 500, just spike recently. When it spiked up, Bitcoin and also the stock market suffered a pretty serious fall. You can see the VIX spiking up and what happened to the NASDAQ. And you saw the same thing happening with the Dow, the Russell, and the S&P 500. And of course, that tremor is felt throughout the entire world. So it's really important to keep your eye on the S&P 500 and the NASDAQ if you're looking at Bitcoin and crypto. The other thing that we've seen, even though yields are increasing, gold is increasing as well. You can see Bitcoin, this blue line, coming down, but that we had a minor retracement because we hit structural resistance on gold, as we've seen. We have X-ray vision inside the markets. We don't look at a price chart like this. We look with X-ray vision, and you can see gold has come up even though the yields have been spiking. Typically, when the yields spike, this puts negative price momentum on the commodity sector, and also it typically brings up the US dollar currency index, the DXY, which also puts pressure not only on crypto but also on gold and silver. We've seen a completely different thing unwinding at the moment. Inside the masterclass, and this is actually a chart from inside the masterclass, it's TM6, we talk a lot about the intercorrelations between different markets. When we look at Bitcoin, we know structure plays such an important role in every single price chart. This structure with Bitcoin has occurred since 2009, which is over 5,000 days. Let's pop on the indicator and see what's cooking inside structure. When we put on the indicator, what we're actually doing is getting X-ray vision on where smart money is buying and selling. Right now, we can see that a very key level is around this 66,900 level. That's very important. We don't want to stay below that level. Typically, these are viewed as safety nets, especially when they become clustered and thicker. The thicker the line, the more structure is there, the more buyers are there. When price is coming down into an area like this, it will slow the ascent or slow the descent in price down to the next structural level. And you can see how incredibly well this structural level held price. That's just below 65,300. These levels also act as magnets or gravitational wells. So even if it passes below, we expect it to pass back. If it's what we've seen here with Bitcoin just recently, even though the markets have come down, they have recovered somewhat as people just understand that World War III is probably not going to happen. Well, not yet at least, and thank God for that. If we think about this particular price action, Bitcoin is one of the riskiest asset classes on the planet. That's why it is so advantageous to hold it. If risk is on inside the markets, Bitcoin will do particularly well. But if risk on is off, and it's risk off inside the markets, you must know where the structural levels will be so that you can determine where structure will catch and reverse things. And this is a absolutely vitally important point. You must know where the strongest structure is in terms of weakening markets. And the markets are weakening somewhat at the current time. So you want to get really familiar with the lower levels of structure. There's some really good narratives around Bitcoin as being digital gold. And being a gold trader in the past, I really believe it. Michael Saylor had a very, very good interview. And he said, if you took $100,000 worth of gold to the airport and you put it in your luggage, they would just confiscate it. They'll say, oh, this is illicit money. We're going to take it. But $100,000 in gold is very, very problematic to transport as well. But $100,000 in Bitcoin can just reside literally on your phone. It's no problem to take with you anywhere, and you can sell any part of it. Gold typically is really hard to get rid of, especially if you've got a kilo bar or a 5 kilo bar or something like that. But if you want to buy some gold, please talk to Purpuratum. Or if you want to buy some silver, Purpuratum is your key. Personally, holding gold, silver, and Bitcoin should be on everybody's list. They're all good things to hold. The only difference between Bitcoin is it's very risk on and very risk off. Gold is slower moving, but it still has incredibly wide recognition. One thing to also keep in mind across the weekend, just know that the weekend the main markets are closed. That's a really particularly good thing at the current time because it means that crypto can go off and do its own thing, not worrying about the yields spiking as they did. And when the 10-year and the 2-year tend to spike and the DXY has staged a massive reversal, we often get this very negative price momentum on Bitcoin and crypto. And just remember that what Bitcoin is doing is what in all likelihood your alts are doing as well. If Bitcoin is just collapsing down, the probability of your alts following that directional movement is in excess of 98%. Therefore, we must look at the structural levels on Bitcoin. The key one is this 67,200 mark. Bitcoin is currently trading at 67,788. If we want to maintain a bullish course and bullish momentum, we need to get above first case scenario 68,800 and then start to trade above 69,200. The bears will seek to take Bitcoin below this congested structural resistance level, below 66,800. If you see Bitcoin selling down here, just be aware a bearish case is unfolding. Another thing to bear in mind, gold and Bitcoin are tending to move in the same base direction at the current time. And just keep your eye on the intercorrelation between your beloved alts and Bitcoin's gravity. Bitcoin's gravity is this blue line. Just keep your eye on that because it's really important to do. If some particular project is showing a lot of strength or a lot of weakness versus Bitcoin, you really need to be aware of it because you can use that to your advantage. Please let me know in the comments, do you think that Bitcoin is going to create more of a digital gold narrative over time? Or do you think gold is still in its own asset class? And people will just reserve that special, oh my God, the earth is ending, the world is ending, so I need to go and buy some gold type behavior? Or do you think some people will also seek to buy Bitcoin? And don't forget about silver as well. Always remember, you control the trade or investment, but the market controls the return, and your returns are always based on your knowledge and your courage. The market will always penalize through losses, blame, and gambling. Your key is to always become as synchronized as humanly possible. You do that by looking far and wide, not just trading and investing in the chart that you're looking at, but by having a strategy to look across as many charts as possible, especially the Tier 1, Tier 2, and Tier 3 charts. Then combine that with a simultaneous down, neutral, and up strategy. That's the way to make some serious money from the markets. Please let me know in the comments, do you think war is incoming? And how are you preparing for that eventuality if it does actually occur? Always remember to win or learn and never blame. Any loss that you make inside financial markets is just pointing out something that you've missed somewhere. It could be some knowledge, it could be some intercorrelations and interconnections. It might be just that you need to develop some own personal rules. And just know that opportunities and life reset daily. There is no setback in this world that you can't come back from. And always remember, those life pullbacks will give you the strength for the next life rally. Have a great weekend ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.